More and more data on the Lotus Emira depreciation curve is rolling in, and it doesn't look good for owners. Prices even dropped below Evora levels. Could that be the better choice over here?
But the Emira market hasn't always been like this.
After the launch there was quite a bit of hype around the Emira, but deposit holders had to be patient. Deliveries were delayed over and over again. It was inevitable that some buyers would try to benefit from this by flipping the first deliveries. The Lotus community monitored the prices closely. Almost every forum has a thread on one of the first cars that was auctioned.
Now for a brief moment, cars actually sold above MSRP or at MSRP, but supply quickly increased from a handful of cars to 40 cars, and this started the downward price trend.
Not even the price increases from Lotus could stop the trend.
There's one problem though. This is what happened in the UK. Data for the US and Germany looks completely different.
So let's dive into the latest price trends of the different countries and see how different they are. Deliveries started in the UK, so this market contains the most data. Looking at those prices, we can see that the median price for a V6 was approximately £85,000 in April 2023. This is prior to the actual MSRP increase, but after the announcement that the price increase will occur. In the subsequent months though, prices started to fall. They fell the quickest between July and October, after which the depreciation rate decreased slightly. This means that prices are now 22.3% or almost £19,000 lower than in April 2023, and that the yearly depreciation rate was 14.5% or £11,200. The decrease pushed prices down to £66,000.
This applies to the V6s only. I need a little bit more data on the i4s to include them in the graph.
Data for the US and German market is also accumulating and reveals that price trends differ a lot across the countries. New data on the US market crystallizes clearly what's going on here. We can see that prices actually increased by 5.7% during the first 6 months after its introduction. This drove prices all the way up to $111,000. In the previous Emira market update, it was still unclear if the initial increase was a result of low supply or an actual development. Now we can see though that it's caused by a strong market. In July 24, only 7% of the cars were listed for sale for longer than 3 months. Moreover, sellers had a decent amount of confidence in the market. They increased prices by 1% for cars that didn't sell.
But the hype quickly faded.
July 24 marked the top. Prices decreased by 6.4% or $7,000 between July and October. Moreover, the percentage of unsold cars increased from 7 to 25%, and cars that didn't sell are now discounted. The average discount rate was 3%, down 4 percentage points from the increase that we saw first. Later in the video we'll talk about what this means for the future.
The situation in Germany is again completely different.
We can see that prices declined by 6.5%. or $6,500 between January and July, but that the trend turned during the last 3 months. According to the trend, prices increased by 4.5% between July and October. This increase though isn't statistically confirmed, so it could be the result of chance. Supply decreased tremendously in this market, and the increase is only visible for cars with less than 6,000 kilometers on the clock. The cars with more kilometers lost 6.7% between January and October, amounting to approximately 9.2% per year.
Now if we put all of the countries together, the differences are emphasized.
Over here we have all the trends in dollars, and that reveals that the markets are fundamentally different. Prices in the UK are falling rapidly, much quicker than in the German market. Possibly, this is caused by the rapid ramp-up of UK supply. At the same time, the German market is still very uncertain. Supply is low, and we need a bit more data to verify the yearly depreciation rate. Yet, it's clear that the rate between January and October was lower than in the UK. The US in turn stands out from the UK and Germany. We can see a price increase, followed by a top and a decline.
These trends are of course descriptive and cannot predict the long-term price development. Yet, they do hold some power when it comes to predicting the short-term price development. So let's speculate about the future.
Starting with the UK, it's fair to assume that the cars will depreciate at the same rate or slightly less than the 14.5% of last year. After all, the market is now 1.5 years old, and depreciation rates typically decrease when cars age. Prices in the German market are more uncertain, but the depreciation rate appears to be lower than in the UK. we saw that it sits between 0 and 9% annually. More data is needed here. In the US, the sentiment just changed. The Emira started to depreciate, but we don't know yet by how much. The average rate for sports and supercars sits at the moment at approximately 7.5%.
The Emira and the Evora are of course related to each other. There are some differences, but the similarities are obvious. So, if you're a value-conscious buyer, it could be worthwhile to consider the Evora as long as the depreciation rate is much lower than for the Emira. Let's find out.
In the UK, the Evora that comes the closest to the Emira in terms of age and price is the GT410. Comparing prices for the two models, we can see that the depreciation rate in the GT410 market is significantly lower than in the Emira market. The GT410 lost approximately 2.3% during last year. Now I say approximately, because the GT410 market is much smaller than the Emira market, meaning that the uncertainty in the number is much higher. Depending on how you look at the data, the rate goes up to 6%. Yet, it's still a lot less than the 14.5% in the UK.
This is already a pretty good indication that an Evora is the value-conscious choice here, but there's more.
If we look at the price to mileage relationship for both cars, you can see that the GT410 that is 2 years older than the Emira, but has a similar mileage, is priced basically the same and has a relatively low mileage sensitivity of 0.38% per 1,000 miles driven. The uncertainty of this number explodes at the high mileage area, but the question is how this number will look for similar Emiras. Will they follow this line, or will they drop below it because they are much newer? I think if you plan to drive your car a lot, which you probably will if you buy a Lotus, the Evora is possibly the more sensible choice.
So how do the numbers look like in the US?
Looking at the price development in the US, we can see that Evora GTs were priced relatively close to Emiras in January 2024, but that the price delta increased during 2024. Evoras became cheaper as prices declined by 6% or $5,600 during last year, slightly less than the average market decline of 7.5%. So whether or not the Evora is a good deal in this fully depends on what will happen in the Emira market. Typically, new cars depreciate more than the average. C8 Corvettes or V8 Vantages, for example, depreciate by rates between 12 and 15%. Assuming these rates, the Evora seems to be the more value-conscious choice.
Let's start to wrap up. Emira price trends look very different among the three countries we look at: the UK, the US and Germany. And this of course makes it impossible to draw the same conclusion for all of them.
The UK market is the most established one, and we saw that Emira prices are falling rapidly. They're now priced at the same level as the Evora GT410. Provided you're a value-conscious buyer, the Emira might not be the right choice for your money.
The Evora GT410 seems like a much smarter option.
The depreciation rate is only a few percentage points, and the mileage sensitivity is likely to be significantly lower than for the Emira. Therefore, I think it makes sense to consider the Evora.
In the US market, Emira prices topped. And the big question over here is how the future depreciation rate will look like.
Depending on the assumptions you make about this, the Evora is or isn't a value-conscious alternative. The case is not as clear-cut as in the UK. More data on the Emiras is needed.
The same conclusion applies to the German market.
Supply is low in this market and more data is needed to get a reliable depreciation rate. Yet, based on what we have now, the rate seems to be much lower than in the UK. Unfortunately, I don't have any data on the German Evora market.
Something to keep in mind though is that this actually assumes that Emira prices can fall below Evora prices.
Traditionally, newer models don't drop below their older counterparts, unless the markets are relatively old. Think about the 991.1 and 997 GT3 for example. In the UK Emira and Evora markets though, we see that Emiras already dropped to Evora levels. They could just as well drop below them.
Alternatively, Emiras can start to push Evoras down, but this seems like an unlikely scenario to me. And with that we arrived at the end of this video. Now if you enjoyed this data-driven way of analyzing car prices but would like to see a video for a different car, head over to my channel. Over there you'll find data-driven market updates for a large variety of cars. Can't find the car you're looking for? Let me know the name of the car by commenting it down below in the comment section. Once there are enough requests for a certain car, I'll make a video about it. As always, thank you for watching and I hope to see you again in 2 weeks for a fresh market update.